Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, a clearer picture on tariffs gives Canada more to respond to. So what's the right plan? And housing is in focus on the election campaign trail, the good and bad in the promises being made. Plus, what is resonating among voters? That's all ahead. First, for the week that was in business, it's time for the briefs. The Trump administration revealed its plans for tariffs this week, kicking off a global trade war with steep levies on its largest trading partners. While there were no new tariffs for Canada, we still face 25% tariffs on autos and 10% on steel and aluminum, plus looming tariffs on auto parts. Global markets plummeted in the wake of the tariff announcements, with big U.S. firms like Nike tumbling by double digits. There were new promises from the campaign trail this week, including a break on capital gains from the Conservatives when money is reinvested in Canada, and a plan to build 500,000 homes a year by the Liberals. It was also the first week without a consumer tax on carbon, which should reduce some bills, especially at the gas pump. Killing the tax is now something both parties, as well as the NDP, support. The federal minimum wage went up this week as of April 1st. The lowest that can be paid to a federal employee is $17.75 an hour. That makes it one of the highest in the country, behind only BC at $17.85 as of June 1st, and Yukon's $17.94 an hour. The lowest minimum wage is in Alberta at $15 an hour. Turbulence thanks to tariffs is upping the odds of a recession. An early estimate of economic activity showed growth had flatlined in February before real tariffs took effect. As economists weigh the impact of tariffs, Oxford Economics says they'll cause a recession with 170,000 lost jobs, lifting unemployment here to 7.7%. Decisions not to travel to the U.S. are having a real impact on air travel and carriers. Advanced bookings for flights between April and September are reportedly down 70% this year compared to last, and airlines are cutting capacity. Air Canada said this week that cross-border bookings are down a less dramatic 10% for the next 6 months. Office vacancies in Canada declined for the first time in 5 years, but not because more people went back to work. The vacancy rate dipped slightly to 19.9% from 20% at the end of last year, according to CBRE, but it was mainly as office space was taken offline, either through conversions or demolition. And those are your business briefs. The Canadian economy is under attack, but let's face it, we had problems before Donald Trump came along. So what's the best plan for protecting our economy in the months ahead? Jim Stanford is director of the Center for Future Work. Jim, thanks for being with us.
My pleasure, Amanda.
So definitely a new set of challenges, but I do think it's important to recognize that we had some challenges already in the form of, underperforming in terms of our productivity and our GDP potential. But I do want to start with your thoughts about the challenge we face because of the global trade war.
Well, we're very dependent on exports as a country, of course. They count for a little bit over 20% of our total value added in Canada, and 3/4 of that goes to the U.S. So depending on how Mr. Trump's tariffs are implemented and what shock effects they have on our export industries, we'll get an immediate hit to GDP and employment that way. Then the spillover effect through supply chains or even through our downstream consumer industries will also be significant. So certainly in the medium term, the next 2 or 3 years, if this all goes ahead, we'll be seeing some very choppy waters for our economy.
And of course, there's multiple layers to this. A global recession means all of our customers are struggling. We had data on the U.S. service sector this week that was disappointing. So even that's sort of starting to slow down, a big export sector of ours that is harder to capture. When you hear talk about protecting jobs, and we're hearing that from our political leadership in this country, does it make sense? Is there a way to protect the jobs that will be affected by this?
Oh, absolutely. I mean, we have been, in a way, obsessed with globalization in the last couple decades, but the actual dependence of our economy on exports might be smaller than many people think. And close to 80% of our value added are things that we produce in Canada for Canadians, and we consume them in Canada, so they never cross a national border. So first and foremost, strengthening our domestic demand, our production of construction and infrastructure and private services and public services for domestic use here in Canada will be a core part of our economic strategy going forward. Then, of course, we're going to have to help those export industries that are hit by Trump find new places to sell their stuff, both in Canada and in other external markets. So We've got a lot to build on. This is not going to mean the end of Canada's economy, far from it. And, while we worry about what comes next, I think we should have some confidence about our viability as a country and as an economy.
I like that optimism, Jim. You obviously worked for a long time for what was then the Canadian Auto Workers. Do we have the same sized auto industry as you look down the road as we do today?
Well, remember, our auto industry today has shrunk significantly since the peak at the turn of the century. So already we've been grappling and fighting to try and preserve as much of that footprint as we can going forward. Now, in the auto sector, the dependence on the U.S. market is even more intense than in other export sectors. So again, it's going to be a huge challenge. But remember also, Amanda, Canada is the 10th largest market for new cars and trucks in the world. We bought almost 2 million of them last year, worth over $100 billion. That is a huge lure. That's a huge carrot for automakers of any nationality. So as long as the government is focused laser-like on preserving the footprint, stopping companies from thinking they can solve this problem by just shifting a plant to the U.S., they can't. If they do that, they're going to lose that Canadian market. And then finding ways to reorient the industry, put more of our supply chain here so that parts don't have to cross the border 6 or 8 times before a vehicle is completed, and so on. We are still going to drive cars, and we are still going to make cars long after Mr. Trump is gone. Just a few seconds, but it sounds to me like you actually see some potential upside in all of this. Well, I don't want to be Pollyanna-ish, and the amount of disruption and dislocation that's happening already is going to be very severe. But we're going to need urgent action from government to support those industries, support those workers, and in a way rebuild a national vision for Canada. So good to have you, Jim. Appreciate it. Thank you very much. Jim Stanford, director of the Center for Future Work. Coming up, housing and affordability are top of mind for voters. We'll check in on the numbers next. Welcome back. Housing and affordability are very much on the election ballot this time around. So here's a look at both by the numbers. Back in 2022, CMHC said Canada needs at least 3.5 million new houses by 2030 to meet demand. But rather than the 437,000 new homes a year they recommend, we built more like 250,000 a year. According to Generation Squeeze, the combined value of existing homes has risen by $1.5 trillion since 1977. That's after inflation. That is enormous upside for those who already own homes. Housing is one place people feel stressed, but what about overall affordability? On that front, there is better news, with inflation back to 1.9% in January before tariffs started to factor in. There's no question costs have risen for Canadians. Grocery prices are up 26% since 2020, and rent is up 27%. But so are incomes. According to StatsCan, disposable income is up 42.5% in the same period. And that increase in income was true across the spectrum, with the poorest Canadians seeing an increase of 40.5%, while the middle class saw gains of 39.3%. Still, housing affordability is a problem. According to The Missing Middle, 20 years ago, only 3 markets in Southern Ontario cost a homeowner 25% or more of their pre-tax income to cover the mortgage. Today, it's true in all 26 markets in the region. Though the numbers might suggest people are doing better, most voters have accepted a message that things are bad. And of course, the tariff situation doesn't help. Mike Moffat is executive in residence at the Smart Prosperity Institute and founder of the Missing Middle Initiative. Mike, thanks for being with us.
No, thank you for having me.
And we've heard a lot on the campaign trail about efforts to help where housing is concerned, less so directly about affordability, but it's all kind of part and parcel of the same story. Have you heard anything that really jumps out at you as worthwhile or that would make a sizable difference?
Yeah, I think there's a few things. I think the conservative plan to eliminate the GST on houses under 1.3 million will help with affordability. It basically takes 5% off the cost of a new home. And because the GST only applies to new housing, it acts as a construction tax. The Liberals have a very wide-ranging platform when it comes to housing. talking on the social housing side by creating a new Crown agency to build homes, along with some tax reforms in order to try and stimulate housing construction. So I do think both the Liberals and Conservatives have some good ideas on housing, and I'm glad to see that they're still talking about it, despite the fact that Canada-U.S. relations are really taking up all the oxygen in the room.
Yeah, and I mean, we've been showing data here that show that, incomes have risen. The affordability picture has improved since it was at the very worst of it. But that's not really true when it comes to housing. Housing is still out of reach in this country. And you've done some really great research on that front, too, showing just how out of reach. When we throw tariffs into the mix and the slowdown that might cause to our economy, plus government funds diverted elsewhere, right? We're going to have to see spending go to workers that are affected by this and companies. Does that mean that we're going to have to take some of the emphasis off of the dollars going towards housing?
Well, I think we probably will have to run larger debts and deficits in order to, deal with both of these issues, both the economic slowdown and housing. But housing is going to be a challenge. We know that housing starts tend to fall in weak economic times, and it seems that that's coming. But also all the supply chain effects happening. We import a lot of housing materials from the United States, like things like appliances. If the Trump administration is putting large tariffs on microchips made in Taiwan, that's going to make American appliances more expensive and raise the cost of building a home here. So these supply chains are all interconnected. Mm-hmm. So the Trumps, even if they're not putting tariffs on us, there's still going to be flow-through effects to the Canadian economy, Canadian home building. How
worried are you today about the Canadian economy and the impacts? And I know there's a lot that we still don't know about how long tariffs might be around, what they actually might look like in the applicable fact. But just based on what you've heard, are you very worried that we're heading into a recession this year?
I don't know if it'll be a full recession, but I'm definitely worried about the state of the economy that, sort of at best, we're kind of in a stagnation period. I'm hopeful that the Trump administration sees what's going on in global stock markets. You're starting to see some Republican senators and Congress people get a little bit worried. So, I guess hope against hope. Perhaps some sanity is coming in the United States, but it's definitely not a good situation, and markets are responding to that.
And I guess the thing we watch most closely, most of us, are jobs and whether jobs are at risk. And that's a bit of a moving target. It is directly related, of course, to the health of the housing market. What are your fears like on that front?
Well, we're already seeing temporary layoffs in Windsor due to automotive tariffs. So, yeah, I'm worried about that, worried about construction jobs and just, the overall state of the economy. We know in auto manufacturing that every auto manufacturing job supports 8 other jobs in the economy because those workers go out and, go to coffee shops and order lunches and that kind of thing. So there is this big trickle-down effect even for goods and services that are not necessarily traded across the border.
Mike, so good to have you for this. Appreciate your time.
No, thank you for having me.
Mike Moffat, executive in residence at the Smart Prosperity Institute and founder of the Missing Middle Initiative. The $1.5 trillion in gains on houses is something all political parties in Canada seem determined to protect. So how can they also speak for new homeowners? John Pasalis is president of Realosophy Realty. Thanks for being with us, John.
Thanks for having me.
So this is the conundrum, as I see it in Canada, is on the one hand, we want affordable housing, we want more housing, but we also want to protect the value of the houses already in existence. Can we have it both ways? Can we walk this line?
Well, it is a tension, certainly. Here's the important thing. Certainly no government, no politician, most people do not want to see the value of their homes go down. And I don't think it's the job of the government to engineer anything like that. I think the bigger tension is, can we live in a world where home prices are not skyrocketing, where we live in a world where perhaps wages can outpace house price appreciation so that home ownership becomes more affordable in the future. And I think that's the path we should be going towards.
One of the really confounding things, of course, about the whole housing problem is, and we have some big promises coming from the campaign trail. I'm curious if you think they sound meaningful. But some of the kind of nitty gritty of getting building done hasn't improved. The red tape, the developer costs, the things that are put in place by municipalities, by governments for good reasons, they haven't changed enough, at least we're told, if at all. So why aren't we seeing more action when everybody says it's a problem?
Well, the challenge right now, especially in big cities like Toronto, is that even if they made some changes, there's a very big gap between what builders needs to sell condominiums for to make a profit versus what the average person is willing to pay today. And that's because builders price their projects on these really high prices that were fueled during the condo boom, where they're basically bubble-like prices. And now that the market has collapsed, buyers aren't willing to pay those prices. So we need to see massive incentives from policymakers, likely to encourage builders to convert their condos into purpose-built rentals. So tax incentives that do that are probably the best way forward.
How much of that was driven by the fact that this became an investor's market? People were buying those condos not to live in, but to grow as an asset over time, maybe rent out in the meantime.
Yeah, I mean, it was 100% driven by that. And I think what happened is at some point, an investor-driven market isn't always a speculative bubble. Sometimes it can be very stable, but at some point, sort of these animal spirits take over, and it's driven by speculation and unrealistic expectations. And that's exactly what happened. In Toronto, investors were paying 40 to 50% more for a pre-construction condo than what an existing unit was selling for. So the prices were completely irrational.
So while we would agree, I think, that you don't want the government managing a market, micromanaging a market, does it feel as though there's more of a role or some kind of a regulatory role to keep those elements from distorting the market?
Yeah, I mean, 100%. I did some work for the government of Dubai a number of years ago, and they had gone through a speculative bubble, and they introduced policies to discourage, repeat of the past. Effectively, as the market became more speculative, too many people were flipping, they introduced policies, taxes to discourage that. So it's not taxes to make money, it's to discourage bad behavior and speculation. So I think there is space for governments to step in when they see the market is getting out of control.
John, so good to have you for this. Really appreciate your time.
Thanks for having me.
John Pizzalis is president of Realosophy Realty. Coming up, what's driving voter motivation these days? That's still ahead. As the election campaign unfolds, are economic promises swaying voters? Nick Nanos is founder and chief data scientist at Nanos Research. Thanks for being with us, Nick.
Great to join you.
So it seems most of the time elections are won and lost on how people feel about the economy and their own financial system. We are in a weird place because there are national interests actually swaying people potentially. How do you see it shaking out versus how people are doing at home and how they feel about Canada?
Well, actually, those two things are completely intertwined. What the research suggests is that Canadians are completely fixated on Donald Trump and our relationship with the United States and wondering what that means for our economy. At the same time, in our Bloomberg Nanos Consumer Confidence Index, the proportion of Canadians that believe that the economy will get weaker in the next 6 months is almost at an all-time high, where almost everyone thinks that the economy is going to slow down to one extent or another.
And of course, so interesting that there have been these big factors beyond our control. Inflation in the last government was one of them. This time there's somebody to blame. Does that make a difference for the political parties, especially the incumbents? They're not necessarily going to wear that economic downturn.
Yeah, the thing is that we just came out of the Ontario election, and Doug Ford, it seemed like he wasn't running against the Liberals and the New Democrats. He was running against Donald Trump. Mm-hmm. We're getting a bit of a repeat on that front, where we have Mark Carney, the individual who is the prime minister, not elected, selected leader of the Liberal Party. He's dealing with Donald Trump. He's looking very prime ministerial. And as a result, you're seeing the Liberal numbers kind of buoy up. What Canadians are not necessarily just looking for solutions. They're trying to figure out and to sort out between Pierre Poilievre and Mark Carney who has the temperament, who has the ability, who has the capability to deal with Donald Trump, but also to help the Canadian economy navigate what will be very turbulent times.
And of course, as we learn more about what that will mean, election campaigns are longer than the time frame they inhabit. A lot can happen packed into just a mere 6 weeks or so. Between now and then, the end of April, do you see the potential for anything, given the history that you've had with these things?
Absolutely. I think this election is going to be a lot like the 1988 election. And for those of us that might remember the 88 election, that was the free trade election between Brian Mulroney and John Turner. There were wild swings in the vote. The debates mattered. Canadians really tuned into those debates because they felt that something was at stake and that they would be choosing basically a direction for the country. And I think we're at that same type of place where Canadians are very engaged, they're focused on the two front runners, and they know that their vote will count.
And of course, turnout will make a difference. How do you think that factors in this time if we do get high turnout and, as you say, high engagement?
Well, usually low voter turnout is good for the incumbent and high voter turnout good for the challenger. I think in this type of election, kind of like the free trade election, that high voter turnout doesn't necessarily benefit anyone specifically because people are going to be very motivated. The reality is that when we test, conservative voters are extremely motivated in their support for Pierre Poilievre, and liberal voters are motivated, not to the same extent as conservative voters, but they're still motivated to get out and vote. The big question is, will young people vote in this election? You know, the thing is, what's interesting is that the conservatives are more likely to do well among younger voters than the liberals. And if we see a big turnout for younger voters, it could be a much more competitive race than people think.
So interesting, Nick. Thanks so much for being with us. Appreciate it.
Bye-bye.
Nick Nanos is founder and chief data scientist at Nanos Research. Time for the takeaway and how the first step is always the same. Canada has a housing problem, but it might not be the one you think. Yes, we have a housing shortage. 2 years ago, it was pegged at 3.8 million homes by 2030, and that was before a big jump in immigration only made the supply and demand imbalance worse. If that were the only problem, the solution is simple: build more houses as quickly as possible. And yet, for all the hand-wringing and forelock pulling, we simply aren't doing that. In fact, we're building at about the same pace as the past 20-year average of 250,000 homes a year. Meanwhile, the number of people working in construction hit a record high in 2023. Yes, more people are building the same number of homes. If you're wondering how that math works, here's what it adds up to: weak productivity. That's problem number 2 with housing. As one of the biggest components of our economy, it is also one with very low productivity, which drags down our national number. But this still isn't the real problem with housing. The real problem is what we've allowed housing to become. Rather than shelter, a house now represents a marketable asset in Canada. It's an investment, in other words. And the cast of characters supporting it as an investment has grown, from the banks who finance to the developers who build to the municipalities who make more in tax revenue when prices are higher, and of course, the homeowner themselves, many of whom bought before prices went truly haywire, but who are more than happy to view the increase in their wealth as the result of their own cleverness. In short, we financialized housing, and now many market participants, who are also voters, have a deep vested interest in keeping things exactly as they are. We may hear talk about politicians about building more homes, but they won't admit that solving this problem might require changing how we think about it. It's not a big stretch either. It's only about the past decade and a half that we let this get away from us. But for a lot of people, it might be uncomfortable. That discomfort should be weighed against the inequity of treating shelter not as a basic human right, but as something that will be out of reach for a growing number of Canadians. My takeaway? Admitting you have a problem is the first step, but that also requires you to identify the problem clearly. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.